party time in the USA because economy. Joining us now, Zach Abraham, Chief Investment Officer, Bulwark Capital, the man, the myth, the legend, sponsor of the show, friend of the show. All right, Zach, I don't know if you're aware of this, but I still have no idea what the hell's going on in the economy. It's up, it's down, it's sideways. There's tariffs, there's not tariffs. Maybe there'll be tariffs. Give us a little help here, man.
Well, look, so the news that came out today, I think that there's most certainly the tariffs are staying. The funny thing to me, Chad, is that you announced 145% tariffs. I think it's over, and then he pushed up to 200.
Yeah.
I couldn't keep up with it, right? Against the second largest economy in the world and our largest single trading partner. And everybody was panicked that the stock market sold off 12.5%. Okay, now everybody's euphoric and, it's another rally because now we're going to have 50 to 65% tariffs. We are headed into recession, okay? Unless something massive changes here, we are headed into recession, and you've got stocks trading like we're about ready to have a growth boom. It blows my mind that more people aren't, that the market isn't catching on to this. You're watching stocks. You're still watching valuations going the opposite way of earnings and revenue growth. Margins are slipping across the board. Airline CEO of Southwest came out and said airline industry is in recession now. You have the worst existing home sales numbers since 2009 announced today. I don't know what people are buying. People are about to get wrecked. And not wrecked as in I think the whole market's about ready to drop. I just think that, first of all, the opportunity, and no one's, you and I both know this, nobody's paying attention. You got a bunch of people that own Apple stock. Nobody's asking the question, how is Apple going to maintain 32 times earnings when their second largest market that was down 11% year over year last year? Okay, now all their stuff is getting tariffed between 50 to 145%. In China, which is the second largest producer of a smartphone that is actually more technologically capable than theirs, it's crazy. And you've got I'm dealing with it. I see it all the time. Oh, I'm not going to sell that. This stock's amazing. It's only gone up. And you're like, yeah, now it's ridiculously priced and you're about ready to give back 50% of your earnings. Well, I don't want to pay cap gains. Okay, so you'd rather lose 50% of your holding than pay 20% on your profit. Okay, obviously you're not a math major, but have a blast. Second, like I said, it's the opportunity cost. Okay, yeah. There has never been a better time to purchase non-U.S. assets. And it is shocking. What's shocking to me even more is the opportunity still exists. Nobody's catching on to it. All these idiots are trying to pick a bottom in these ridiculous stocks that aren't worth a fraction of what they're trading for. And, I understand why. And here's why. No matter what issues we faced economically for the last 15 years, stocks went up, right? Why? Because we had the world reserves currency, and because of that, we were the only ones printing money, okay? Now, we're the only ones cutting spending. You got a global trade dust up. I wouldn't call it a war yet, right? And because we've been doing it, so think about this. Look at the reversal of where we're at. Okay, we're at 130% debt to GDP, and we got some serious budgetary problems, some serious questions called on that front, right? Well, flip around and go look at Germany. Germany's 60% debt to GDP, which means, remember, if their economy accelerates, they're going to get higher tax revenues, right? So let's say you print 20% of your GDP and you throw it out for fiscal stimulus. That may not even be far from revenue neutral to Germany because of the increased tax revenue they'll get off the stimulus, right? We can't stimulate. We're cutting. We're cutting spending. China launching their biggest fiscal stimulus ever. Their stock market's down 65, 70% from the highs, right? You go look at the earnings on average. You got companies that are growing faster here than they are in the US, and they're trading at a third the valuation. We are watching a scenario. I don't know. I personally, I think if I had to guess, you're going to see another big, ugly down day tomorrow or Monday. And it's really funny. You look at the chart, we've got a nice little downward trajectory going today. Today, you tried to rally above that downtrend line and you got above it. And then throughout the trading day, it leaked. Guess where you stopped at the end of the trading day? Just at that trend line. Okay. So there is nothing that's been fixed here. Not even close. And if all you did was tariff China 50 to 65%, that puts you in recession. And we're celebrating it with a market trading at close to 30 times earnings. It's insane, man. And like I said, it is chaos. And then you look around, what is it that investors own the most of by records now? What do they own the least of? They own the most of U.S. stocks. They own the least of commodities, specifically gold, and the least international exposure they've ever had. Again, I'll keep repeating it. They say they don't ring a bell at the top. They just did.
Yeah, absolutely. Talking to Zach Abraham, Chief Investment Officer over at Bulwark Capital. The market is insane, and they come out. What is Tesla down? 70-some percent, 71%, when just as far as what they thought they were going to earn, they're off in a major way. They come out and announce this week. I look and their stock's up, and I'm thinking to myself, it's not because they're shedding a bunch of stuff, doing a bunch of stuff, going lean and mean. It's just because people are like, oh, this is a great time to buy. I sit there and I go, man, this is going to be, there's blood in the streets coming, and people, you and I talked about it last week. Many of these young traders in particular who are now in their 40s have never, ever seen a bear market, or they've seen some down days. COVID doesn't really count. That was chaos, and that's a once in a millennial thing. These people think that they're all Warren Buffett, and it's going to be fine.
Yeah, well, here's a perfect example of what I mean. Okay, the largest position, the largest single stock name in our book, okay, now not even close to the largest sector exposure we have, but largest single name in our book is Google. Okay, if you add in after hours, Google beat earnings expectations this quarter by 34%. And if you look at after hours, the stock is up 7.5% on the day. Okay, here's how stupid this market has gotten. That Google is the cheapest of all the Meg 7 names, and yet it's the name that has virtually zero exposure to China. Still growing at 14% a year. Crushing on margins, and it's trading at almost half the valuation of Apple. It's everybody's like, oh, are you shocked by those Google numbers? And I'm like, no, not at all. That's why it's our biggest position. They're like, well, didn't you think that China exposed? They don't have any China exposure. Read a 10K for God's sake. Yeah. Do some kind of research, and it's frustrating because stocks are trading for every reason other than fundamentals. At the same time, that frustration is paired with incredible enthusiasm because I have never seen, and a lot of it, unfortunately, is going to come on the backs of retail investors. But while everybody is chasing all these ridiculous names, like I said, I've been doing this for 17 years. I have never seen as many cheap quality assets that nobody's interested in. And, it's sort of like, hey, who wants $100? And everybody just starts like climbing over each other. It's like a riot. You're like, hey, who wants $1 million? And everybody's like, no, don't bother us with that. We're chasing that $100 bill. It's nuts. But I'm also licking my chops. I'm thrilled with the opportunities we're taking advantage of on a daily basis.
So talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. You look out there. Obviously, I feel like there's going to be a recession as well. And I know people are like, oh, because when I talk about it, on the radio, people think, oh, you hate Trump. It's not about that. It's just the reality. I don't know what he's doing. I don't think it's some magical thing that he's doing. And, the people out there were like, you don't even understand. He's playing 4D chess. He's going to crash the market, force Jerome Powell to either quit or drop rates. He's going to refinance, and our debt's going to be cheap. They play out all these scenarios. What's the average person think, and what's the voter think? Because that may be great for the nation if that was to come true long term, but short term, the voter and the consumer aren't going to be happy.
Well, okay, so let's pretend they're right. Why do you own a bunch of U.S. stocks?
Yeah.
Right? If you go, no, because look, I will bet you the farm and every animal on it, that is not what Trump is intending to do. Just like you, I am not at all anti-Trump, man. I am cheering them on. I am pro-Doge. Okay. I'm cheering on Elon Musk. I'm pro-Doge. Guess what our single biggest winner this year has been? Shorting Tesla. Why? I don't let my politics get in the way of my investing. Can't do it. If I think we have an opportunity to make 60% in the space of 60 days, 20 days, shorting a stock, I don't care if that offends your political sensibilities. I want to make my clients that 60% return in 2 weeks, on one stock, obviously. But you guys, you can cheer for Trump. It doesn't mean you need to go buy a bunch of irrationally priced assets that are there based on greed, not on support for Trump. It's greed. Okay. Don't be confused. And I'll just bet you, I guarantee you, take a look at Scott Besson, right? If you think he's just sitting there all loaded up on U.S. stocks, you're out of your mind. You're out of your mind. And guys, the other thing is, and I don't know how many times people need to say this ain't Trump 1.0. Okay, when Trump came in after 16, he was coming in after 8 years of ridiculously bad economic management from the Obama administration. They didn't do anything. All they did was rely on zero interest rate policy and have the Fed print and fill the hole. So Trump comes in, corporate tax cuts, business is back on. S&P was trading at 17, 18 times earnings at that point, and the economy took off. We're literally in the opposite position now that we were in the first time he came in, right? You got the market virtually double the valuation. Debts are higher. Growth is falling. Okay, you've already got the corporate tax cuts. Our government is cutting spending, which is great long term. We need to do it. But that short term hits GDP. It's just math, right? So my biggest thing to people is, listen, if you are super pro-Trump, you're better off going into the next election with a substantially higher account balance so you can donate to his next campaign. Don't sit there and get run over because you own a bunch of irrationally priced stocks. Trump isn't the reason that, like I said earlier, he's not the reason they're irrationally priced. No. It's greed. Yeah. It's greed. It's 15 years of a market going straight up and it being the only game in the world, right? That all of those conditions have changed. So change with them. Change with them.
It's crazy. It's crazy. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you because they would be foolish not to, Zach. I tell that to everybody. Don't be a fool. What do they do? How do they reach out to you? How do they get that second opinion?
Yeah, man. First of all, I think the easiest thing to do is listen to our daily show, The Daily Dots, where we go over all this stuff in real time. And usually it's about 25, 35 minutes. And you can get that by just going, you can watch the video feed on YouTube, Know Your Risk Podcast. Go to knowyourriskradio.com, subscribe to the podcast. We do this show every day and then a longer extended show on Fridays. Or go to bulwarkcapitalmanagement.com. We got a road show coming up. And I just want to say this, man. Obviously, I want to grow my business. We want to, bring in new clients. At the same time, even if you don't listen to me, go diversify your portfolio with some GLD, some international exposure, some Japanese, South American stuff. Just go Now, do I think you could do better coming up? Sure, but just you don't need to sit there and take it on the nose. Trump is a billionaire regardless of what happens over the next 2 years. You're not. Okay, so act accordingly.
Absolutely. You're the man. As always, love having you on. We'll do it again next week.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.